Man, I'm hanging this up. All right, cool. Looks like we live, man.
What's up, brother?
What's going on? So before we get into some talking, let me send this link over to the people. So what's going on with you, man?
Man, just grinding, man. You know how it is. Just trying to get it in where I fit in.
I'm excited to have you on the pod today.
Thanks, brother.
Definitely. You know what I mean? So we can talk about real estate investing and just setting yourself up, and what can people do in the next 30 to 60 days to really position themselves. Obviously, we got the holidays coming up and everything, and people
Yeah,
that prioritize like the
it's like
holidays.
get my information in. That's all people want is right now is to do their shopping,
Yeah.
get their goods, get their book, get everything in order. You know what I mean?
Yep. Yep. Exactly. But for the ones that are paying attention, the ones that are diligent, the ones that want to take advantage of certain opportunities and position themselves. So like whether it's in December or January when they're gonna strike on an opportunity, they're ready. They're ready to go. You know what I'm saying?
Yeah, for sure. You know what? It's all about like being prepared and understanding where you are currently, right? And that's
Yep.
like the most important thing. Like doing an assessment of where you are and then where you want to be. And then how can you fill that gap, you know? And I think that's where people can spend a lot of time over the holidays is just, um like really putting that action plan into place. You know, we've seen real estate spike so much since the pandemic, like you have to have a game plan in place because the way prices are rising, inflation and everything, it's like you gotta have a game plan. And in the next, I kind of feel like prices are just going to continue to go up. So it's either you're going to get in or you're going to get left behind, right? And
Yeah.
it's not obviously it's not a bad situation to not be in there, but you got to touch real estate some way or another, whether it's investing, or anything like that. You got to touch it. So, like in
100%.
the next
So,
60 days, what people can do is like if you have a home.
well, hold on. Don't give them a spice yet. People just
I thought you want me to go in. I thought you want
people
me to go
people
in. I
just
thought you want me to go in.
people just logging on right now. Couple of people just logging on right now. All right, so
All right.
this is Talk Money Tuesday. This is episode 3, and
Talk money.
I got my brother on, a very good friend of mine. And before I introduce him, I just want to say Levi is currently traveling, so that's why he's not on, my co-host. So I'm holding it down for the episode, which is fine. I mean, I do this, what I'm saying, it's normal. So we're gonna focus on my guest here, who, one of the things that this gentleman does is not only does he help people position themselves with the equity that they may currently be sitting on to invest that to create generational wealth, but he's going to give you a lot of information of how you should position yourself moving forward. There's a lot of the time people look at investing in real estate as a large thing, and though it is a large undertaking, it doesn't have to be, right. Once you get access to the information, you can literally play real life Monopoly.
That's
So
true.
I want to bring on my guy, Jason Allen John. Man, welcome to Talk Money Tuesday, bro. I hope you're ready to give our viewers some practical and tangible information that they can take action within the next 30, 60 days and put themselves in a better position.
Yeah, I'm ready to do it, man. Thanks for having me on. I always wanted to get onto one of your shows.
Well, you can come on the other one too, man, for sure.
Yeah. But there's a long waiting list for that one. It seems like, right? So,
I mean,
so
I mean, that episode won't air until like February or March or something if you jump on the other one. You know?
all right.
Yeah,
I'm
yeah.
about that. I'm about that. But yeah, man, I'm excited to be on this. Hold on, let me get this out of my background. But I'm excited to be on this. To talk to the people. I think there's been a lot of change in the landscape of the environment, especially in real estate, and and just work in general. that a lot of people got to get prepared for what's could be potentially happening next. And real estate's all about preparation. I think preparation and planning is everything in real estate, because as a mortgage agent, I like to say, it's like you just don't wake up and like, I want to buy a house tomorrow.
Yeah.
It takes time, right? So it's very important that we all understand where we want to be and what we can do right now, and then how you fill that gap, right? And
Yeah,
that's
yeah,
what's
yeah.
important,
I
is
definitely
that
want to
gap.
touch on that. Definitely want to touch on that because I think there's a couple of iterations, right? And when I say iterations, because obviously, I'm licensed as a real estate agent in California and then also in Massachusetts, right? So when I
Mm,
say iterations, I feel like there's some people that don't have that. Okay, so there's some people that may not have the information.
yeah.
Then there's some people that may have the information, but they're not ready credit wise. Then there's some people that may be okay credit, but they're not. They don't got the income. Then there may be some people that don't have that have the information, but don't have their credit proper. Or don't have their income proper. So definitely want to touch on just getting in position and getting ready. So then when there's an opportunity, you don't have to double back and then it'll take you at least 6 months just to get in a position you would have missed out on the opportunity.
Yeah, like what I like, it's funny because what people do a lot is like they'll say like, okay, you know what, Jason, I'll talk to you once I've paid down this debt.
Yeah.
And it's like, why wouldn't you talk to me now? Like, why would you wait till you pay down the debt to talk to me? Because I can help you today. And maybe in some cases you don't have to pay down the debt right away to get that house. You might be able to do it with the debt. We could include it in your servicing. So maybe that money is better suited to put down on the property than to be on your debt, right? So I think people, like, you always want to be over prepared. I find like everybody wants to say like it's perfect, and it's funny I'm saying this to you because you probably laughing in your head me saying this about other stuff in my life, but everybody wants to wait till it's perfect to buy that house, or I need that credit score, or I need a certain amount of money in my savings. But then in some cases you can get creative. Like I know a lot of situations where people buy houses with no money down, or maybe they bring in their family members to assist them with a down payment, right? So there's a lot of strategies that we could talk about and different ways people can get into the market, and it's
Yes, let's dig into one of those. Let's dig into one of those strategies. But before we do, I just want to let everyone know if you're looking to invest in crypto, gold, silver, international real estate, domestic real estate, whatever the case may be, maybe you want to purchase a vending machine route. The Private Money Streams Mastermind is definitely a mastermind group that you want to tap into. That's the PMSM group. Levi oversees that. He's definitely the one you want to talk to. And our listeners on Talk Money Tuesday, you take advantage of $10 off your first month in that. So I definitely want to highlight that. So I just want to make sure you guys know that. And with that being said, Jason,
that
when we get
sounds
into
dope. That sounds
yeah,
like a
yeah, yeah,
dope group.
they got a lot of different opportunities, man. So he just invested in a vending machine route out of Florida because
Oh wow.
that information flowed through the group. Different NFT information, different cryptos that are on the horizon. Obviously, domestic real estate, international real estate, gold bars. So they got a lot of different investment information that's available within that group.
That's dope. That's dope. So yeah, so let's get into it a little bit. Let's talk about a couple of ways. Let's talk about the people who feel like they're not prepared and they're not ready, right? And let's just say maybe you need to save a little bit more or whatever, but you have good income and you can actually qualify for a mortgage. Like, what do you do? Maybe you don't have a down payment. That's when you tap into your resources and your network, and I like to say, like, sometimes it's like, say, like I go to you, Brandon, I'm like, listen, I need to buy this house. What if I could pitch it to you as like you're investing in the property with me? Like it's almost like you're gonna get like a free rental property that I'm gonna pay the mortgage because I'm actually living there. I need that. So I say to you, listen, man, like I know maybe you have 30, 40, $50,000 that you want to invest, and that investment might work better working with me to buy my house. And you can give me my down payment. Like, and people never ever think about that, right? So instead of me coming towards you and saying, oh, can you lend me money to buy a house? Why don't I say to you, Brandon, why don't you invest with me? And
Mm.
think about that risk of that investment as an investor. It's very low risk if I'm a credible person. You know that I'm going to pay my mortgage, or and that's similar. It might be even lower than my rent that I'm paying right now. So you know I'm responsible for that. And then you get in as an investment, and then you can get a percentage of that equity in the future, and
So
however you
break,
guys
so
make
break
your deal.
So break that down, man, because that sound pretty spicy. So let's talk about the situations that each individual is in. So you have one individual. Is this person, he wants to get a property, but he doesn't have all the capital, and then the other person has the capital and he's looking for an investment.
Yeah. Like say for example, say you're somebody, you're self-employed, right? And you can't qualify for a mortgage, but you have capital, right?
Mm,
And I'm an employee and I make good salary, but I don't have capital. Could we not work together and accomplish both of our goals? Where you may
right.
want to invest that capital and I want to get a house. You know what I mean? And
Yeah,
especially the way the real estate's been going, you might be in a position in a year or two to refinance that capital that you put me in, and then now I can just take you out, and then you get your return on your investment and you can go do your thing. Or what happens if you want to leave it in there for years and years and just continue to earn that potential growth of that real estate? So now it makes sense for you if you know that I'm going to be buying this property in a great location, right? Number
yeah,
one, you know that I'm going to make sure I maintain my payments. Number two, and then number three, it's somebody that you really want to help as well. So it's almost like a social impact in investment.
So if you're someone that's watching right now, that's listening right now, and like Jason said, if you are, if you work for yourself, if you're self-employed, or maybe you're an employee to your business,
Mhm.
and then your partner, or possibly just someone who is stable in a W-2 situation, but they for some reason they can't get the house. You guys can partner up and invest, and then get a potential property. Why aren't people taking advantage of like this strategy? You think?
Well,
Why
I
is
think
it because?
honestly, it's something
Yeah.
that we don't talk about a lot.
Mm.
And then two, it's not a typical type of investment, right? It's not like buying a mutual fund or investing in the market or crypto nowadays. It's unique, right? And then I also think a lot of it has to do with positioning. Nobody knows the
Oh,
right positioning. Like, how do I position myself to be a credible individual that you will want to invest into something that may work out for me, you know? So it's a situation like that. Or let's just say even you're a person that could actually help and be on the application. What if we bought a rental property into duplex? And then it's a way for
yeah,
you to invest. And instead of you having a property manager, you have someone that wants to build that equity, that in the long term that they want to go. So it's just about being creative. Like
yeah,
nowadays we have to get creative because it's getting harder and harder to get into anything right now. So, like what do you do? What's the solution? Right? So I know, like, obviously I'm from Toronto, so I know some people are going to listen to the States. So I don't understand the way the market really works there 100%. But at the end of the day, it's all very similar. You know what I mean? There's a certain number of money you need to put down. There's qualifications based on your income. So I'm sure I could break it down very similar how it is in the States. But
yeah,
as far as what I'm talking about is group economics. That's like
yeah,
important right now, right? And I think that's the only way we're gonna get ahead as people because we have to work together. Like that's the otherwise it's hard. You may cap out at one or two properties because you can't qualify anymore, right? So the next phase is to switch maybe into an income property or into working with other people so you can buy something bigger like an apartment building or anything like that, right? So
So do you think it's important for like people that are in relationships, or whether you're dating, or maybe you're gonna get married? Is this something that people should think about when they're choosing a partner? Like, you know what? We can potentially be business partners, or investment partners on a real estate project, something like that, because with your credit and your income, and my credit and my income, or whatever the case may be, like Jay, like you were saying, we can qualify easier for possibly a bigger investment or multiple investments. So do you think that is that a strategy that people should be thinking about and considering when they're like, when they're getting together?
well, that might be the best business partner is your life partner, you know. So if you guys are on the same page,
Yeah.
and maybe you have a yin to the yang, like maybe someone has capital and someone doesn't have capital, or even this one person has the ideas and the execution to put it together,
Yeah.
right? So that's also important too, right? So I think there's multiple layers to it, and that's the thing that I love about real estate. There's no one way in which you would you do something. You can do it multiple ways. Like you can, like I say, you could partner, you could do all it all on your own. You could borrow money from the bank. Like I know people who have taken money from their student loans to buy real estate or their credit cards, right? So there's multiple ways to do it and get creative as long as you believe in what you're doing.
So what does that what do people actually need? Maybe there's somebody watching this right now and they want to get into a property, but they don't know where to start. What are the 5, 6 things they need to do to get in position to then be proper to come see someone like you?
Well, I think the first thing to do is to obviously reach out to a mortgage agent right away. Like literally right away. The first step, right? And how you can help a mortgage agent or a mortgage professional is to probably grab your credit report in advance. So you can get that by signing up for any of the services on, Equifax or TransUnion. You could really sign up and get it, or Credit Karma. You can get your credit so you understand where your credit score is, right? And then if you provide the mortgage professional with your income, you could determine what is the max amount you can qualify for. From that, you can go from there, right? And then you could take it to the next level. So let's just say you can't qualify for what you need in your area. Then you start looking into options where it's like bigger down payment, a co-signer, and maybe like we were talking about before, someone that's willing to invest with you. And that's the possibilities, right? The other thing that I want to talk about too is that people a lot of time don't think about is that if you can't qualify to live where you want to live, why not buy a rental property?
Mm.
Because a lot of times people be like, I can't afford now, so I'm not even going to get in the market, right? And then you just wasting time. So imagine if you bought that rental property with what income you had available, and then over 5 years, that rental property created some equity that you could then use to buy your property. So now you have two properties instead of one, right?
So,
Or you
so
could wait 5 years to buy that one property. What would you rather do?
So I'm taking notes right now because when the call's over, I'm gonna send out, some information, right? Some valuable steps. So I think the first thing, and I'm gonna collect them through
Mhm.
this episode. So number one, you realize, I mean, what? No, not you realize. Number one, you said talk to a lender. That's number one. So
Number
I
one,
so
talk to a lender.
so identify a lender that you can have a conversation with, that you may feel comfortable with, to then take that first step. Now, as you're talking to that lender, you want to potentially already have your credit profile pulled, so you kind of know what you got going on, right?
Yeah, you don't want the lender, when the lender pulls your credit, they pull a hard credit. So it affects your score. And it's almost like you want to be prepared when you're going into a meeting. Like why would you
Mm,
want to waste time
yeah,
and on your end and the lender's end at the same time? Like if you know your credit is garbage, you could still talk to the lender, but
yeah,
maybe you could say like, "Hey, my credit's not great. What are the steps I need to qualify? Or what can I qualify with my bad credit?" So you're not disappointed when you're walking into the meeting. And that happens a lot of times. Like people have this big expectation for what they want, and then we have to bring them down to size, like, and say like, you know what, you can't qualify for that, right? So I would say that. So let's go through like the information you'll need when you see with the lender. So step one is see the lender. When I see my lender, I need my credit information, my income information. Usually, if you're self-employed, you probably need 2 to 3 years worth of your tax returns and most likely 6 months bank statements. And if you're an employee, you usually just need a job letter and 2 pay stubs.
yeah.
Also, you need to be able to demonstrate where your down payment or your savings are coming from. And that can also come from a gift. So there's various levels for that. Now, the second thing is once you have your budget and you know everything in line, now where do you want to live? What's important to you? You need to lay that down, right? So once you understand that, then I would say the third step would be is then you would speak to a realtor. Because then when you go speak to a realtor, you're armed with a lot of information. So you guys are not in a super discovery stage, right?
Yeah.
You know, I'm sure you know, Brandon, like people are coming to you and they have no idea what they're approved for. They have no idea what they can qualify for. They don't know where they want to live. So you're spending so much time in that discovery zone. If someone
Yeah.
comes and
Sometimes
says,
I gotta
hey,
take them back to that beginning stage.
now you got to go see the lender. Now,
Yeah.
where do you want to live? Like you're asking these questions. So if you want to be more prepared, these are some of the things you could do in advance, right? Then from there, then you go through your options, right? Do you want to buy a property that you're going to live in? Is it a rental property, right? You go through those two options, right? So then that's step 3, right? That's step 4, step 3, step 3.
Step 4.
Step 4, those are the options, right? And then step 5, it becomes you and that realtor then really start going out and going that search, right? So once you find that property, then you move back to the lender, which is step 1. You choose your rate, your term, your amortization, and all those type of aspects, right? And why I say that's last, why that's last is because what rate, what term, what amortization you're going to pick is going to depend on the property that you choose, right? So I'm not going to want to lock you into a term that's going to have a lot of penalties. If you say to me, Brandon, that like, yo, Jason, I'm going to be moving in the next 2 years. This is just a temporary spot while I bring up my income to that next level. Or this may be your forever home, right? If that is, then there's a different term, rate, mortgage that we go through that. So that's what I would say, like, you know, the 6 steps in the home buying process.
Yep.
In the most ideal situation.
So I took a bunch of notes. So everyone that's tapped in, if you want this information, you know, we'll get it at the end, but I'll definitely email it over to you or text it over to you so you have it. So something that you mentioned earlier that I thought was very interesting is you said, okay, maybe you know you're going through the process and going through the steps, right? I realize that I may not, you know, be able to afford a certain area that I want to live.
Mm-hmm.
But then you suggest potentially investing in a rental situation, right? So if someone's investing into a rental property, are they currently renting where they are? So you're saying if let's say that person is me. I'm like, Jason, I want to live over here. It looks like, property is going for like 850 or whatever the case
Yeah.
may be. It looks like I can only qualify for 650. So
Yeah.
my situation, are you saying, okay, Brendan, stay where you are, stay renting, but let's invest, let's take this 650 and invest it over in this area so now we can get you some rental income. Is that what you're saying?
Yeah, that's what I'm saying. Because they always say time in the market is better than time in the market. Right? You know what I mean? So, like, obviously, if you're a swing trader in stocks, you're going to tell me I'm saying the opposite thing of what you do. But in most cases, like in real estate, being in it wins. And and if you can get in it as soon as possible, you're most likely going to end up winning just because of what's going on with inflation, and what we're seeing with prices and dollar devaluation and stuff like that, right? So at the end of the day, you want to get in early rather than late. So there's a lot of times that my clients can qualify for a rental property and they don't want to buy it because, to be honest with you, the one thing that I can't understand, and like, it's a personal preference, what it means to own a home. When you own your own home, there's a price of home ownership that there's no monetary value that anyone can provide to you. So a lot of times when I suggest to people,
it's real emotional.
yeah, it's really emotional. And then you, like, at the end of the day, you feel like you cannot be moved from this property. But in reality, most people, the property is owned by the bank. So yeah, you're paying a mortgage, but it's really almost like you're renting from the bank until you pay off that loan, right? So in some cases, for some people, like, say, for example, you're somebody, you live, like LA, like you, and you want to live like downtown. It may not be feasible for you to buy a condo down there, but it might be feasible for you to rent it. And then you may buy an investment property outside the city that maybe even, for example, you maybe like be able to Airbnb and run and then collect that investment income. And as you're building, you could then go and purchase your property in the future. Otherwise, what a lot of people do is they just sit there and they wait and they wait and then they wait and then they wait. And then by that time, the prices have gone up and gone up and gone up, right? But if you bought a rental property, your equity would have gone up, would have gone up, and then you could have either sold that property or potentially refinance it to pay for your property that you really want as you're building
So,
yourself.
all right. Okay. Two things I wanna touch on real quick. One of them arguably could be controversial depending on who's receiving the information. But it's definitely an interesting topic. So the first one is collecting assets.
Correct.
Why is it important for someone to be looking at uh, you know property in the real estate market, right, in the game, as
Yeah.
you know what, I'm buying cash flow. So let's talk about that first, right? And then right after that, I want you to touch on um, renting where you live, right? And then purchasing property, because a
Yeah.
lot of people feel like they need to own where they live at,
Yeah.
which is a liability in some cases. I
It's a
really feel like
liability.
I feel like it's a liability, right? It's not an
Yeah.
asset if it's not bringing no income.
Yeah.
So
They
so
bring
let's
no
let's
income.
so let's touch on both of those real quick if you don't mind.
Well, okay, so let's go to the first topic, right? The point of building assets is to be able to hopefully those assets generate cash flow, right? And with cash flow, you could have paid for the things in your life. And cash flow is the most important thing. You know what I mean? Because that's the only way you're going to get to that what you want. Because assets are cool, but in order to get something from that asset, you have to sell it, right? So if you have an asset that brings you cash flow that also appreciates like real estate, that's why everybody loves real estate because there could be two folds: cash flow and asset appreciation. So if you the more assets that you accumulate, the more leverage that you can have that will allow you to do different things, such as like using it to buy a business, you know what I mean, or using it to buy some land that you want to develop. If you have other assets, you can use that as leverage in order to get other things, right? So I always liken it like this: the best thing for us to do as individuals is to look at ourselves partly like as a business. you know you sometimes you got to sit down and you ask yourself, if I was a business and I was looking at my life, how would I handle that situation, right? So like I say, like there's some people maybe tapping in that have equity in their home, right? If you're a business, what would you do with that unused equity or unutilized capital? You'd want to disperse it to get more assets that bring in more cash flow, right? But we tend to not do that with our personal assets, right? So that's number one. So asset accumulation is important on all levels, whether it's stocks, whether it's houses, whether it's jewelry or NFTs right now,
Yep.
crypto,
Yeah.
whatever it
You
is.
we
It's
talked
all
about that
about
last week. We
accumulating
talked
those
about that last
assets.
week. Yeah.
Mhm. So number two, you're saying that people sometimes need to rent where they live and buy what they can afford that they could rent out and bring in cash flow, right?
I mean,
So
you can arguably live better in a rental, right? Because
well, think about it. You have
yeah,
less responsibility,
yeah,
and you don't have to fix things. And people, you know what it is? It's funny. Like people will buy a house and then be like, "Oh my god, I made all this money in the house," but they never talk about all the expenses they went through throughout the time. Because every time you do something in your house, you look at it as an investment. So, like your roof gets repaired, or you have to get a new stove, or there's some sort of like damage on your house and you have to repair that. If you're a tenant, you don't have to deal with that. So imagine you're in a situation where you take your cash, your savings that you have, you buy a property that's cash flow, and now you're paying your property is giving you like $1,000 a month in cash flow, and you use that money to offset your rent, and now your rent's cheaper, right? I know some people that are living for free off cash flow, off their properties. They don't own a property, but they have 3 or 4 rental properties that they're able to use that cash to live for free. So that's why it's important, because it's in this day and age. It's like, how are you if you're not selling something, or you don't have a product, or you have something that consistently churning and bringing income into it? How else are you going to create cash flow for your future dreams?
yeah.
And real estate's one of them.
So we got a question real quick. Someone wrote down, She wants to get a little bit of a understanding on leasing to own as a potential opportunity transitioning from renting currently. So like, is leasing to own a viable option for someone looking to transition to ownership?
Definitely, it's a viable option. The only thing is it all depends on who you do it with, because there are some risks associated with leasing, and on some of those terms, it depends, right? But however, I know someone that's doing lease to own, and they're doing really well because the purchase price that they negotiate their deal at, the price of real estate has gone up so much. Like
Mm,
it's at the point where they can go get hard money, private money, pay off the lease to own, sell the property, and make a lot of money, right?
still make out, yeah.
So it all depends on your terms and where you're at. So I do like it as an option. However, there are some lease to owns where the lease payment is so expensive that it makes sense that if you just saved your money and then you end up buying a property at a different date. So I think it all depends. But there's a lot of, like, even in, for example, in Toronto where I'm from, there's a lot of new companies that are coming out with this type of service where it's like, it's more like you also have to put a percentage towards the down payment of the property, and you pay a lease, and it kind of adds up, and you build equity that in the point that later you could use that to purchase another property in the future. So again, anything that you can do to build equity, do it. And lease to own is an equity strategy. However, you also have to compare it to, are you able to save that money on your own with maybe a market rent that's probably a little cheaper than the lease to own.
That makes sense. Okay, so what about this? Because I've seen this a while, right? And this is definitely your specialty. Everyone talks about, okay, I got it in a property. I'm getting equity because I got it for this price, and the market's going nutty right now. So now my property worth so much more. I got all this equity.
Yep.
So let's talk about how can people tap into the equity that's in their home, right? Because a lot of people don't even tap into it. It's just there.
Yeah.
And then what can people actually do with the equity? What are their options? So number one, how do they get the money out of the house?
Mhm.
And then number two, what are their options for utilizing that equity to actually maybe make some more money or invest in something different?
All right. So number one, I think that's what people need to do right now. Rates are at historically low rates, are historically low right now, right? And although they've gone up like, a bit in comparison to where they were at the lowest heights of the pandemic, they're still really low. So if you can refinance your property, so what refinancing means is basically like increasing your loan. So you basically go to the bank and you say, "Hey, I want to tap into my equity." So most lenders will lend you up to 80% of the value of your home. So let's just say you're sitting on 20%, and let's just say your home is 500,000 and you have a $300,000 mortgage, right? If you want to go up to 80%, you could get up to a $400,000 mortgage, and you get $100,000. Now, what could you do with that $100,000? Multiple things. Like you can buy another rental property. You could become your own bank and be a private lender. I know some people that will take that money, lend that money out, and they earn enough money to pay their mortgage payment. Like imagine that.
Mm.
Like that's just an amazing hack, right?
No, yo,
Because
is that a key to the game right there?
that is the keys to the game.
Yo, just quick little sidebar before Jason continue. He has a book and a course that's about to drop, giving a lot of value. So I was just curious that sounds like a key to me. You know what I'm
That's
saying?
the key. That's a key. That's a key. How do you become your own bank? Because if you think about it, that's what the banks are doing to us. They
Yeah.
just use, fractionalized lending, and that's what they do. So if we don't take advantage of it, like, and if people are not realizing they're not seeing that the value of the dollar or their purchasing power is going down because of inflation. So the only way to keep up with that is to have more cash flow coming in. So tapping that equity might be a way how you could get past this inflation by being able to tap that equity and redeploying it to better uses, right? Because if you think about it, sitting on that equity is not really going to put food on your table.
Not at all. Not
And
at
I tell
all.
people that all the time. Like, sitting on your equity is not going to heat your home. Sitting on your equity is not even going to pay your property tax bill. So having all that equity is cool because it's a number on paper. But if it ain't working, it's dead. It's dead, right? So yes, I understand in some cases you may want to give it to your kids in the future, or there's things you want to do with it. But what if you could take that equity and grow cash, and then you could have cash and you can still give it to your kids in the future? You know what I mean? There's nothing wrong with that, right? Because if you're growing your assets at the same time, then you can use those assets to pay down the debt in the future, right?
That's that's a solid key right there. Like that's some information I feel like I can utilize. You know what I'm saying? Like definitely tapping into the existing equity that you have. I think saying that you can use that equity, become your own bank, lend that money out, get some points against that money is tremendous. Obviously, using that to get into another asset is obviously incredible as well. But like, what are some non-traditional I would say non-traditional options that most people aren't thinking about in the marketplace right now when it comes to utilizing the asset. So if I have a property right now, in my mind it's like, oh well, I don't want to be a landlord. What can I do to generate income with my assets? So I think becoming that bank is definitely one. But are there any other non-traditional options that someone can have to leverage or make money with a property that they have?
I'll give you a unique one that no one ever thinks about. Imagine you can use your property as collateral to work on an investment property or to do a development property. So you may not have to take out the equity through a refinance, but like, let's just say me and you are gonna go purchase a plot of land and we're gonna build a building on that, right? And we need to go to get a loan, right? We could tap into the bank and say, you know what, you may be like, you know what, I'm going to use my house as my down payment. So we go to the
Mm,
lender and the lender will cross collateral your home.
that's crazy.
So you're not tapping into that. And then we're going to build this building. And at the end, we're going to build the building. We're either going to sell it or we're going to refinance or we're going to generate cash flow from that. And all you did was place your home as collateral. Obviously, if something does go wrong, your home could be taken. But at the same time, if you're using it for proper revenue producing cash flow and assets, that could be a way. If you don't want to increase your mortgage, you can use it as collateral. And that's a definitely non-traditional way of using your equity. And not a lot of people think about that.
Yeah, that's crazy. I was just gonna say, like that whole thing. Yeah, I mean, that had me thinking about Monopoly the whole time. You
That's
know what I'm
it.
saying?
You know what I
Like,
mean?
like literally, that had me thinking about the game the whole time.
And that's the thing. And it's just like people don't understand that you could leverage yourself with other people to do much more. You know what I mean? Like that's what like all these companies right now, like BlackRock and all these like Zillow and all they're doing is using leverage to buy homes and capital, right? So they go out to the market, they raise capital, and they're buying these houses with so-called cash, but it's not cash because they have leverage in their back end, right? So how do we become like a mini BlackRock or a Zillow or these type of companies? Well, we have to use everything that we have. What do you think they use as collateral to raise that capital? Isn't it the equity that they have that they've generated and the
That they
value of their
generated, yeah.
company,
But it's
right?
not even their
So
money.
again, it's their money, but they're making their money work for them. And what we don't do, we don't make our equity work for us. We sit there and try to pay off our mortgage to zero. And then all of a sudden we need money. And then what do you have to do? Sell the asset to go get the money. So if you use the asset the whole time while you're paying it down to make more money, isn't that really the smart thing to do with your house if you're gonna own a home and you're gonna live in it?
I think so.
Yeah.
I think so 100%. All right, so on this show, right? I know Levi agrees, but he's not here. I like to really give the viewers and the listeners practical information. You know what I'm saying? Like real life practical information that they can receive and implement, execute within the next 30, 60, maybe even 90 days that can put them in a different and better position. So what would you say someone that maybe they don't have any assets, maybe credit's cool or credit's getting better, they have some income coming in. What would be like, a playbook or a blueprint that you could lay out for them to put themselves in better position? Let's talk about January, February 1st. Let's say they want to make a move now. They're listening like, yo, this makes sense. I'm gonna make a move. And then they could do these couple things. So then come January, February, March, they're in a whole better position.
I would say number one, find a deal. Like if you want me to tell you what you can do in the next 60 to 90 days, find
Yeah,
a
let's
deal.
get that.
Find a deal. Like at the end of the day, you need to find something. If you have no money, no down payment, but let's just say you can qualify for a mortgage, find a deal that me or anyone would want to invest into.
Yeah, I was
And
gonna
then
say. So
look
when you
for
say find
investors.
a, so when you say find a deal, for those that may not be privy to like the terminology, what do you actually mean? What does find a deal actually mean?
I mean, like, you're going to be with family, Thanksgiving's coming up for you guys and Christmas is coming up, right? What about that auntie or that uncle or that the grandfather that that is going to be selling their home or they want to liquidate something? What happens if you could bring someone to the table that can buy the house for them, that you don't have to bring in a realtor and you could wholesale it, right?
Mm.
I say find opportunity. There's opportunities everywhere. It's just about really structuring and putting things together, right? And that's where, if somebody wants to tap in with me and discuss that, I'm good at that. Like if say, somebody that's looking to sell a property and you want to match it with a potential buyer, that's a way too. You know what I mean? I'm sure you might have people in your network that do a lot of real estate. Find them a deal because they'll pay you commission. People love to pay commission on deals. If you get me a property that's undervalued and I can buy it, I'm definitely going to pay you. So if you don't have assets and you're trying to get into the game, add value, whatever way you can. And it could just be showing someone an opportunity. That's how you can add value and maybe you can get in, right? The other thing is that the most important thing is like what we talked about at the beginning is being prepared for everything. So
Mm.
knowing what you want and knowing where you got to go. So as you're tapping into the new year, if you're saying like, oh my God, I need to make $100,000 in order to qualify for X house, then develop a plan in action so you can make that 100,000, right? And put that into implementation. But number one, man, find a deal, find something, add value to somebody else that is interested in real estate or somewhere where you can get capital so you can go get your own real estate, you know?
Where could I go to find such a deal? Let's say I'm novice. I'm not, my best information is going on Realtor.com or Zillow. Where am I looking to find said deal?
At the end of the day, said deal is going to come from your network. It's not
Mm.
going to come from realtor.ca. It's not going to come from Zillow. It's going to come from your network. It's going to come from someone. And it's honestly, you know what I say? You want to put that energy out there in the air that you're looking for a deal. You're looking for something, and then you'll never know if you're positive, it'll pop out on it. You, Brandon, you talk about a routine and visualization and stuff like that. You got to visualize this stuff in these deals because otherwise they're not going to come to fruition. So it is difficult out there, but there's so many ways where people could add value. They don't even realize it. And they don't take advantage of that opportunity. So I always like to say is like, I love to match people. I like to figure out a way to help somebody get paid. You know
Mm.
what I mean? So I like if you look at it that way, if you help enough people, you're going to get that return. So and then not only that, you're going to get experience and they're going to show you how they structured the deal, how they got it done. So then the next time you might be able to do it, right? Another way is, to be honest with you, grab your network and group them together and do group
Mm.
economics
Yeah,
and
yeah,
then
yeah.
go after a property. Why don't you sit down 5 or 6 of your good friends together and everybody toss in a few $1,000s, and then you guys go out and buy a rental property?
Well,
Or
that's one of the things I was gonna actually ask you next was just that power of harnessing group economics because a lot of people as you know may not be utilizing that as a lucrative resource.
Mhm.
They may not know about it or know what they could potentially do, but I think that's very not only interesting, but I think it's very smart for someone to do. Like if you know you got a couple of good friends, or maybe you got a few friends, and maybe y'all are all on the same level. Maybe a couple, maybe a little higher, a little lower, whatever the situation may be. But you can come together as a collective, and like Jason was saying, invest in maybe a duplex or a fourplex or something.
Yeah, man. And that's the thing. It's like getting together and working together, right? It is difficult to do these. Like, if you think about it, how do these people buy these massive apartments, like 100 units and stuff like that, right? It's usually not one person. It's usually a company or a corporation, and that usually means there's multiple efforts put in to get it. So get your team. You know what I mean? Or you know what? If you don't have a team, go on a network in on Facebook, or join the winner circle,
Yeah,
and tap in and say, listen, I have a deal and I got some capital. Is anyone ready to join in with me? And that's it. That's all it takes, because you never know, right? And those who don't ask, they'll never get, So at the end of the day, like, you're gonna have to put yourself out there in some sort of way if you want it, right? So if you don't have it, if you have nothing to bring, and I'm talking about nothing to bring as you don't have the cash flow, or you may not have the income, then you have to bring the opportunity.
Yeah.
Right? You have to be the light. You have to be the source.
I like that. Be the light, be the source. Okay. So we talked about a little bit of group economics. We talked about assets over liabilities. We talked about tapping into the equity that may be pre-existing. We talked about utilizing that equity for non-traditional and traditional opportunities. You gave us 6 steps, 6 practical steps to put someone in position. We talked about how important it is to just start, because the longer you wait, the more expensive it's going to be. And then we also talked about, potentially continuing to rent where you live and invest in other opportunities, so you have less, liability in a place that you're living, and you're more flexible. But then you have cash flow opportunities that you're investing in, and that's adding to your income and to your bottom line. Is there anything else that you feel is important for the people to know, that you could share with us?
I think the only other thing is that I think that we're going to see real estate continue to go up, and you're going to see that rents are going to get tougher no matter where it is. So if that's the case, buying cash flowing rental properties might be a really, really solid thing to do. So go ahead.
I actually had to raise my hand on this one. This just popped in my head, because I think what you said just resonated with me, right? What we went through, obviously with COVID and everything, it affects different areas differently. So I think when you were talking about looking for a deal, and I think this is something that people should keep their eyes open for, especially cash flowing properties. Sometimes the landlords are in position that they get stuck.
Yep.
Or they get in a position where they leverage too much.
Yes.
Maybe you can look for a deal with someone that has an asset that's currently cash flowing. You're gonna solve a problem. That problem may be getting them out of the situation they're in, because maybe this might be 1 or 2 properties in their portfolio.
Yeah.
And if you get it from them, and you can actually potentially get it in a non-traditional way, because you may not have to go through the whole bank situation. You may just have to stop the bleeding on the current mortgage.
Yep.
Maybe they're behind 2, 3, 4 months.
Yep.
So I think that's
so that works out. There's also I've seen situations where people, it's exactly like that. Like, you just kind of swap the equity, and like, I buy the house from you, and you give me like what they call a vendor take back. You give me a loan back that's basically my down payment. Then I could pay you interest on that down payment. You know what I mean? So you might be able to cash me out the house. Like, for example, like, there's a lot of people right now where their house value, they never ever thought their house would be where it is. So it's like, all of a sudden, like, oh my God, I wake up in the morning and like my house is worth $100,000, $300,000 more than I expected, right? So imagine you find someone like that, and then you make a deal with them to say, how about I buy your house? Your house is worth $600 on the market. You really only need 400 right now. The other 200 you can wait for. What if you gave me a vendor take back and you give me my loan that I can buy that property? You're walking away with your 400,000, which you need where you can go. And now you have another $200,000 that I'm maybe paying you monthly cash flow. You know what I mean? And that's something you could take advantage of, because there's a lot of people that don't even know the value of their home.
You
You
know
know
what
what I
I'm gonna
mean?
say. You know what I'm gonna say, right? Just in terms of like the other business that we do and we work, man, bro. That information is so killer, man. That needs to be. You need to put that out, bro. That needs to be out. I hope you guys picked up on what Jay just dropped, man. Talking about equity swapping and vendor takebacks and getting into a situation in a very creative and non-traditional way, and then that's creating a cash flow opportunity for you. That's major, man. That's
And
major, right?
that's the key, and that's the same. And at the same time, remember that person on that other side, you may be relieving them of something. You know what I mean? So, like you were saying, what happens if that person had a bad tenant? They lost their tenant. The tenant damaged the place. Like
Yeah.
I know, like I'll give you a situation. I have one of my clients, or actually, it's one of my friends. He is renting a place right now that he took from a landlord that the person prior to him damaged the place, and he's getting 6 months free rent because he's fixing the place while he's living there. You know what
That's
I mean? And
yeah.
his goal is he's fixing it in a way where the value is going to go up of the house. And then he's going to pitch it to the guy to sell him the home because he knows he doesn't want the home and it's a problem for him. So
Mm.
you see how that can be an opportunity. And
Yeah, yeah.
actually, that person is a family friend of him. So he was there at a family dinner, and he found out about the troubles he was having with the rental property, and he needed a place to stay. And he's a guy that's good with his hands. So he was like, "Hey, I'll come stay at your place, but I'll fix it." So he added like a deck in the back. He painted. He put hardwood floors in the house. He did all that stuff, and he's adding value. And then he told me what his next move is, and I said that's genius, because that guy's probably going to want to do that for you because you have increased the value for him. You have added that value. You took your time, you took your energy. He paid for all the materials, but
Yeah.
my friend did all the labor. And that's a way you trade. It's back to bartering at the end of the day. It's straight bartering, right? And how can I make your situation better? So if you know what somebody wants, you could provide them a plan to get there. And that could also give you what you want, right?
Yo,
And that's it.
that's crazy right there. That's heavy, man. I hope you guys have been paying attention. Jay dropped a lot of gems.
Too
There's
much bombs, man. Like I
a
got too
lot
much.
of
I think I got too much information and energy in this head that it's like, gosh, it's coming out, man. Like,
well, you know, I mean, you already know. I already know what we've been talking about. It just
yeah,
needs,
we've been tapping in. And
it
it's
just
like,
needs, it
yeah,
just needs
you've
to
been trying to
happen,
get this
man.
out of me.
It just,
This is a lot of holding back. But like I say, there's a lot of, the thing about it is knowledge is power, right?
yeah,
And at the end of the day, we have to be here to give what the knowledge that we have, and not giving it to people is ruining opportunities for them to take advantage of. And just understanding what you need and what you have and what you need to get there, and you'll get there, man. Like, it's rough. Like, we're both entrepreneurs. We started with nothing, and we've created momentum and created a business for ourselves and sources of income and stuff like that. But at the end of the day, we all started with nothing but like a dream, right? So
yeah.
everyone can tap in, and there are opportunities. They're there. It's just you have to look for them, and I think that limit mind frame it reduces a lot of people from getting what they want. So overall, like we said, like, if I want to summarize what I talked about today, you know what I mean? Understand your current position. How much can you qualify where you're at? Now understand where you want to go. And if where you're at, you can't get there right now, what is that gap? How do you fill that gap? And then the third thing is just look for opportunities. And they're everywhere. Just be
Mm.
open to them. And just they may be in places you may not want to live in. And then the last thing, you may want to rent where you need to live and buy where you can afford and where you could bring in cash flow. And I
Mm.
think if people can look in their lives and fall into one of those buckets, the next 60 or 90 days you can accomplish a lot. All right?
100%, man. I couldn't say it any better than that, man. So before we let you go, one of the questions I want to ask you is, if anyone wants to get started and just learning more about financial literacy, real estate investing, maybe even group economics, are there 2 or 3 books that you could leave that you could recommend people to tap into? What would you say?
Okay, man, that you put me on the spot. Let me think. Okay. You know, the thing about it is that if people want to start in real estate, and it's funny, like we were talking about this the other day, I would tell people to read Rich Dad Poor Dad,
Yeah,
right? And the reason why I would say that, and I'll straight up, and I'm gonna be honest, I've never read the book, but I've consumed a lot of his information. So I kind of understand, you know, the rich dad and the poor dad scenario and that kind of stuff. I think that that book preps people's mind to understand the different ways of how the world works, right? So you could be a worker or you can make things work for you, you know? And that's the big thing about real estate. So I would say that book is that would be number one.
okay.
I think another book that would be very important. I think if you're in Canada, there's a book is Master Your Financial Freedom, which is about the Smith maneuver. In Canada, we can't write off our mortgage payments, so you have to strategize. I think that's a key book for anybody that's in Canada because you could take advantage of reducing your debt while increasing your asset base at the same time. And then I think the last book has nothing to do with mortgages, but it's my favorite book, Principles by Ray Dalio.
Yeah,
I
that's a good
think
one.
if you read that book, you'll understand like the cycle of life and the loops and the challenges that he talks about that we all go through, and utilizing a set of principles and integrity that you're in when you're trying to make deals with people. I think it makes sense. Ray Dalio always talks about like being open and honest and transparent. And I think if you can find ways to help people by being open, honest, and transparent, you'll get a lot out of it. So I would say those are the 3 books I would say to get started. And then, you know, in a few weeks, you'd be Mortgage 101. You could cop that and and you can tap in.
All right, so look, guys. Jason's been a gym, dropped a lot of value. We're gonna pay some bills real quick. This episode is sponsored by paperloaf.com. If you're looking to raise your credit score, if you're looking to be in a better position, you know, Jay told us that you need to know where you're at. Maybe know where you're at is getting your credit situation right. So you definitely want to make sure you tap into paperloaf.com. They're also located right there on social media, right on Instagram, _paperloaf_. That's _paperloaf_. Jason, man, I really, really appreciate you. You know, we're friends. You know what I'm saying? We're you know, we got some projects that we're working on, but just having an opportunity to have you come on this show and give a lot of gems and give a lot of information that people can literally implement in the next 30, 60, 90 days is huge, because I want people to listen to this and be able to, you know, take stuff from this and change their life, you know, in the next 30, 60, 90 days, put them in a good position. So next year, you know, they'll be flying. Maybe if they're in Canada and listen, they can tap into you and your team to get that mortgage. If you're in, you know, if you're in the States, you got to find yourself a
I'll
lender.
find somebody
But
else, man.
but you can still listen to Jason's keys and tap into his book and tap into his course, because, like you said, you know, the laws may be a little different here and there, but the information is pretty much similar.
Listen, it's not the same. It's about leveraging yourself and leveraging assets in order to get more. No matter what, it's the same. I may not know how the banks worked in qualification, but the information that I say works on both sides of the border, works all over the world. It's about real estate. It's about leverage. It's about using your assets, and obviously the most important thing, it's about adding value to whatever you do. So that's all it is. And if you add value, you can make money in real estate. That's all it is. That's all it's about, adding value. Where are you adding value?
So we got a question. I just seen a question pop up. So before we top off, Marcia asks, and I guess I'm asking too. He asks, when's Jason's link to the course? When's the book dropping?
Well, she said, "What's the link?" And there is no link yet, so it's gonna happen. So you know what I mean. And the book's gonna drop first quarter. 2022. So we're putting that out there. First quarter 2022. There's the intent. It's out there, right? It's gonna be out there. So we're gonna do it. And honestly, to be honest, man, this chat made me think about I should probably do a different book, or do both.
I mean, that's the next book, bro. This next book. Look, my book should be dropping at the end of this week, but my mind's already on book number 2. So
I just thought, honestly, yeah. I thought of something, man. I thought of something. Like I'll talk to you one-on-one about that. But I thought of something. I think it's something that I could probably put together that could work on all sides of the border. And that's what got me thinking. Like some of the things that you were thinking about, that you mentioned. So you're gonna have to send me this so I can watch it again. Actually, it's gonna be on YouTube.
It's literally about to be up straight to YouTube in a little bit. I'll get some clips from it, but we're streaming live, so this is gonna be available in a little bit. The last thing that I was gonna say is make sure that you guys tap into Jason. He's been graceful enough to offer us 2 free 30-minute sessions for anyone that wants to tap in. Make sure you text 213-410-4920. Text Jason. Why don't we just do that? Text Jason to 213-410-4920 for your opportunity to win a 30-minute strategy session. We're gonna pull 2 winners, and then you'll arrange that time with Jason in his schedule and get a couple of more keys to the game. Man, thanks for.
We'll give them the keys to their game, and that's the goal. I just talked about keys to the games, but everyone's keys are different. And your keys are different than my keys, right?
I like that, man. I like that. So I'm gonna type it right here in the chat. Text Jason 213-410-4920 for your opportunity to win a strategy session. And yeah, man, thanks a lot for tapping in. Really, really appreciate you. You and I will talk. Get you on the pursuit next, bro.
The pursuit. Well, by the time I get on pursuit, it's gonna be a different pursuit. Yo, shout out to you. Later, keep doing what you're doing, brother. Keep inspiring. Keep moving, yo. I appreciate you.
Yo, 2022 gonna be major, bro. I already know.
Hey, it's gonna be major. All right.
All right, man. Peace.
All right, peace, King. Bye.